All right, so I tried two trades yesterday. They both lost. Um, to be fair, one of them was not really according to plan, and the other one was a bit tricky, but it was according to plan. So really, there should have been only one loss and one missed trade, and not missed in the sense of I missed to take it, but just because it was outside of my time. So, is it recording? Yeah, just to be sure. All right. So let's just break down that trade and actually do it from this timer. That's decent enough. So we took out previous daily lows, previous weekly lows. Then we took out this low and even took out Asia low. Then we reacted. The price came into this 1 hour POI. Gotta see it over here though. You can see strong hour closure. If anything, indicating that sells were still valid and that the bearish momentum was going to continue. So, not in the sense of candle closures, not the best area to look for longs. As you can see over here, we got a strong push to downside and then indecisive followed by another indecisive candle or slowdown candle. So that's maybe better to look for longs. This is also where the long trade played out. Let's just quickly go over the losing trade and the winning trade. So below all these lows were taken into the range liquidity take, and then for the winning trade, we also took this low, Asia low, and price came into this 3-minute POI for that long. For this long, we had this POI. This was the losing long. Set below these lows, set below Asia low, set below previous weekly lows, previous daily lows. One thing I want to check. So for this one, for the winning trade, we took out another weekly low, which is even better. So let me just do it like that. Mark it on like that. Just a line and a W. So now we know that we had that weekly low over here being taken out as well. Another extra confluence like for the long trade on the high time frame. So it is a liquidity play because it's not but it has a POI to it. I would not focus on the POI. I would focus on the liquidity being taken. So then what can we see in a lower time frame? First, let's discuss the losing trade. Pretty straightforward. We got this bullish structure, low, high, higher, low, higher, high, etc. Then we get the bearish break over here, and then we had this low, this high led to that low. Then we had this high led to that low. And we can see price came back and broke bullish, or a strong bullish candle as well. We had some form of early buyers. Oh, let me just go in replay mode for the trade. We had some form of early buyers over here. This one, just because it took this high, that led to a low, but not really major. Then we had this one over here, took out this high that led to that low. Also not the best one, to be fair, because it's just minor structure breaks, not major structure breaks. Then we had this range, high down to this low, and then this return to discount, bearish break, bullish break. And there was me. Last week, I was struggling taking direct entries and was waiting for too much confirmation. So that was like my focus point, just take the trade. And I just took the trade and it was an instant loss. This was the trade. And yeah, That's basically the story. It's a beautiful trade though, but just didn't work out. Followed the plan, and price just continues to follow bear structure, bearish order flow. Look at the liquidity buildup. So I was favoring longs. Sorry. Actually took so much lows. All right, we can remove that now, knowing that that happened. And we can continue to the next trade, which was the winning trade, and that was outside of my trading time. And yes, maybe I should have been there, but I wasn't because I don't trade that time. And I was at the gym, so I couldn't do more. And it was a beautiful trade from the 3 minute. So we got this structure going on. High, low, lower high, lower low. And as you can see, we get minus structure on the 1 minute time frame over here. And price breaks bullish. So we got one over here. This could be one. Taking out that high and then long from there, but it's a bit intricate. Then you got a high, low, lower, high, or equals. All equals. That's beautiful as well. That's even better. So we got equals up there. We got actually no, because you have to use a 3 minute for this one. Get a nice bullish break over here. You can see. And the return to this block is before reaching premium. So actually, let's mark that out though. So you get your early buyers over here. Low, high that led to low, bullish break. Early POI 3 minute. Then you get your equals here as well to the downside. What a beauty of a trade. And then if you leave your breathing room on the 1 minute, I don't know if you can make it. So 605. Beauty. And if I know it's 605 and I know that this wick is up here, I will take 606. Oh, so we take 606 or 607, whatever it is. That's just a thing. And then stops low, 3.9, 4.4, and 1 to 5 just gets hit. Perfect. Money mate. Break even after we reach the premium. Why? Because we're in a bearish range, internal range liquidity taken. So break even. And either you take something off the table here, maybe something off the table after this high, or you just start at 1 to 5, but yeah, because we are at that 3 minute POI, so you can like say, all right, price is about to turn around from here. So yeah, that basically happened. That was the only valid trade yesterday that played out. And really, no, it's like half an hour for my entry time. Except for that long over here, there was no other trade to take. Though maybe here, but this one has no like early buyers to it. You could class this as your early buyers. Nah, like this is everything. Liquidity build up here, liquidity build up here. Beautiful minor break. Internal range liquidity to target. However, we took the weekly lows though, so it is a valid trade actually. Low, lower low, break, leaving this order block. Oops. stops below the low, 2.2, 2.7, and it reaches a 1 to 4. So yeah, but yeah, so for this one, I would take maybe profits at that level, and for this one, I would have taken profits above here, 1 to 3, because it's all counter trend. All right, so that's the case study. Enjoy.